Michelle Graves, your host on The Power of Money, and I'm honored to have you as a part of my world in this coming segment. With The Power of Money, as you know, we are interested in three things. First, that you get the necessary education so that you and your family will have the information to do well in these difficult times. The second thing I'm interested in is for you to be empowered to prosper. I want only the best for you, but you can't get that if you don't have the education and then the drive to make it happen. And the final thing, and perhaps the most important thing, is that you be energized. Because life is more than a journey. Life is about living. And so I want you to learn these things and to be empowered and encouraged and energized. I'm Michelle Graves. Now here we go.
And welcome to today's segment of The Power of Money with your host, Michelle Graves. That's me, affectionately known for the last 40 years as the Money Lady, specializing in all aspects of money. But my real claim to fame is my undying commitment to empower you and your families through information, resources, and people that are seasoned in the area and subject matter that I'm going to be talking about. Today is no exception. I've got a phenomenal show, so you want to sit down, get your pen and paper in hand, and take notes. My guest today is Mike Bowers, who is nationally recognized as one of the top advisors in the area of senior housing options. As we age more and more, we're looking at the challenges of home ownership. What can we do? What should we do to get through this period in time? Do we need to age in place and stay in our own homes? That, of course, is what according to surveys, that's what seniors want to do. So without a long list of accomplishments, which in his case are significant, we're going to devote this next time period, this next hour, to talking to Mike and getting his impressions, getting information, and perhaps you can benefit, and if you can, you should give him a call. So, is Mike on the air? Are we ready to boot him up on Zoom? Oh, great. Good to see you today, Mike. How are you?
Good morning, Michelle. Great to be here with you. Can you hear me all right?
Doing great today. Looking forward to a great show. I think we need to begin with the basics, and that is give us a little bit of background about who you are and what makes you so special.
Well, the basic epiphany I had occurred back in 2003. I had been a banker for many, many years, and living in the West Coast, I was dealing with and meeting and enjoying the company of many boomers who were relocating to the Sunshine State. And it occurred to me that these people had never really thought about living so long, needing so much money to live with the respect and dignity that they wanted, that information that would be available to them was pretty much hidden from sight. So back in 2003, I sat for the SRES designation, that's a Senior Real Estate Specialist, and for the last 18 years, I've devoted myself with passion to serving fellow boomers like myself to help them meet ever longer periods of retirement. That's been my devotion, it's been my passion, and it's been my pleasure to serve that group of folks.
So can you tell me, because clearly you are a senior and you look remarkably well, what do you think we are facing right now, not just with the COVID situation, but with the whole area of seniors and aging? Can you speak to that before we get into the meat of what you do?
Absolutely. Part of what I'm going to do later in the show is to kind of give you a 20-minute tutorial of where the program has come from, why the need exists, and what some of the solutions might be for our senior who are watching this show this morning. The bottom line is that most of us who have had our head down, raising our families, we sometimes have retired too soon. We've been able to save too little, and we wake up one morning and saying, oh my gosh, I still feel healthy, happy, and hopeful for the future, and I never realized I would live this long. And anytime you have longevity, it requires money. And most people just haven't had that experience of saving, lending, and investing their money in such a way that it would last for ever longer periods of retirement. In 2021, the federal government tells us that a female age 65 should plan on living a productive life through age 91 to 92. That's a long, long time to hold your breath if you haven't provided enough income to live with the respect and dignity that we all hope to have, Michelle. And I think that's the conundrum. That's a 50-cent word. But the bottom line is it's a problem that most of us did, in fact, perhaps through no fault of our own, retire too soon. We've been able to save too little. And oh my gosh, we're living too long. That, in essence, is the challenge that 80 million seniors, what we refer to as boomers, those people born in 1946 through 1964, are experiencing. And it's been my pleasure to serve that fellow group of boomers, to give them options and choices that will help them to live a productive retirement with the respect and dignity that we all hope to have and to enjoy.
So my question is, because I don't believe that people deliberately set themselves up for the scenarios that so many of them are facing today, and are completely inundated with information, and internet has been good, and yet it's been challenging in terms of the accuracy of information and resources and what a person should do. And that's why I really have you here today as my guest, because you represent a significant asset in a senior's life, according to data, and that is the home. And so what can we bring to the table that they may not know?
Well, to your point, Michelle, we are inundated with so much information, it's hard to sort out. And there are two types of information that concern me. And we'll talk about that a little later in the show very specifically. But there is one body of information that's just strictly misinformation. It's information that maybe has a historic position, and it never probably was true, but it carries forward through innuendo, rumor, and somebody thinks they remember what happened to somebody else. The one that's most disturbing is the one that I refer to as disinformation. People who, for their own agenda, are purposely misleading seniors and other consumers with bad information that only promotes their singular position, what they're trying to sell, move, or in some way influence people, whether that's politics, how they spend, lend, or invest their money. But it is clearly misinformation that confuses the subject of how do seniors make better financial choices. And that's what I spend a lot of my time. In fact, most people with our company spend about a third of our time doing nothing more than educating seniors about their financial options so that, in fact, they can make better financial choices. That's the challenge that we all have, is to gather enough information that will empower us to make good decisions. And when you have good information, it will give you the confidence to do those specific things that will help you to get through ever longer periods of retirement. And that's the challenge. And I think the big takeaway from today should be that when you're a boomer, you're a senior, time is not your friend. You need to make decisions based on the best information that you can accumulate to analyze your situation, and most importantly, controlling the cost of shelter is the number one expense for all seniors. Number two is medical, and surprisingly, number three is transportation. You must address those three areas of your financial life in order to be able to have the confidence to go to bed, put your head on the pillow, and not twist and turn. That's a big order for 80 million people, Michelle, and that's what you and I have been about for many, many years.
You bring up a very powerful perspective. My question, and of course, you know, you've been out here given your background and your profession and what you're doing right now. Let's talk more about that, because I am very concerned about the reality that is facing so many of our seniors who are homeowners. And if you don't mind, and I know that you are involved and do these reverse mortgages, can we spend some time talking about what it is not, and how it works? I'm going to give you full range to share from your experience, and why there would be any hesitancy for anyone who is eligible to go through the process. Is it because of family? Is it because of disinformation? But feel free to speak about that, because I really want to get into this. This is so important. You can go.
Well, Michelle, with your permission, I have prepared just a 20-minute presentation that will lay the foundation as to why the HECM programs were created, why they exist today, and why they're so important for considerations to every senior. Will it solve everybody's problem? Clearly not. Will everybody qualify? Probably not. But the vast majority of people certainly should be conversant with that option, conversant with that choice, because it can provide a solution to a very significant problem. And I would like to discuss that if we could at this time. The HECM program was created way back in 1987. And prior to that year, the HECM programs were referred to as the reverse mortgages. And it was the wild, wild west. There was no licensing, there was no compliance, there was no regulation. And one of the things that Congress did was listen to HUD, Housing and Urban Development. And HUD went before Congress and made the appeal that our government, along with every other national government in the world, needed to take control of establishing a program that would serve the housing needs of millions of seniors. So in 1987, Congress did in fact pass what we refer to as the HECM program. The acronym HECM is HECM, and it stands for Home Equity Conversion Mortgage. It was signed into law by President Ronald Reagan in 1988, and most importantly, it has been the law of the land for over 33 to 34 years. And what we need to understand is that today, as you and I have this conversation, Michelle, we have 80 million people in the United States alone that meet the definition of boomer. Those people that were born in 1946 through 64. Our government, nor any other government throughout the world, has enough beds, doctors, nurses, and caregivers to look after and provide housing and care for 80 million people. That's why we constantly refer to the option of aging in place. But in order to age in place, you must utilize the existing home to the maximum possible ability. it may be a shock to many people to realize that 2/3 of America's wealth is locked up in the equity in their home. It surpasses, in many cases, the 401k or the IRA, and it's locked up. It's illiquid. You can't use it. You can't access it. Many of the homes in the Midwest that I visit and that my boomer clients share with me are 55 or 60 years old. In order to age in place, they may in fact need a new roof, a new heating air conditioning system. Even a water heater today costs $1,200 to have it replaced. The bottom line is that a home has always been an expense. It's an expense the day you bought it, the payment, taxes, insurance, maintenance. And today, as you are retired, the home continues to be an expense that you must budget and plan for. And our government and every other government in the world has programs that address the housing needs of millions, and in China, billions of people. And to that end, the government has provided a program that is uniquely different from any other program that you might speak of. And some people have a very jaundiced view of a reverse mortgage, or as we refer to it as the HECM, the home equity conversion mortgage. But let's step back a minute and realize that HUD has always promoted residential lending programs for special groups of people. Let's think about those men and women who honorably served in the military. When they were discharged, they were able to get 100% financing and 3% for closing costs. That sounds like a very special group of people that HUD promoted a housing program exclusively for. If you were in rural America, you could get a USDA loan, United States Department of Agriculture, down payment, tax credits for buying and living in a home in rural America. In my past life as a banker, a mortgage lender, I have had special programs for policemen, firemen, and teachers. Now let's circle back to the seniors. There's nothing unique except that we're meeting the needs for 80 million people to continue to live with the respect and dignity that we've all hoped for, and to age in place in their own home. And to that end, for those folks that will qualify, you are able to monetize, in other words, liquefy the locked up cash in your home to make improvements, to modify, to age in place, to be able to pay for at-home care, to get a better Medicare supplement, to pay for current updated estate planning vehicles and tools and legal documents, certainly to provide for a power of attorney, durable power of health care, all of those ingredients that we as seniors must have, must provision for, and keep current. It's not an option. It's not a matter of if. It's only a matter of when you will need to address these various items that I just discussed.
I think you brought up some very, very, very important considerations for our senior population, Mike. And again, because of where we are in the United States as we speak, and I say this because in 2008, of course, our country was teetering on the brink of collapse. And as a result, there wasn't the housing building activity that we had grown so accustomed to. And so now we find ourselves in a really difficult and challenging time where there's not enough housing stock and seniors don't quite know where to go. And again, from what you're sharing with me and my audience right now about this particular program and why it falls right into the federal government's arsenal of tools to help people specifically in this case seniors, do you feel that the hesitation, given the history and how long has this program been in existence?
Well, it came effective in law in 1988. So we're really talking
1988.
about 33 years. It's
That,
been
that's
around
a
for a
long
long
time.
time.
That's a long time, Mike. That's a long time. And so when we see the benefits, particularly today, what can a senior do if they want to consider this particular government-backed program? What are the steps? What do they need to do?
Well, the first thing we always need to do with real estate is determine the location. I would say that 40% of my business comes from seniors who are relocating. I call it repatriation, coming back to Ohio, Indiana, Kentucky, Illinois, to be what? Closer to family. Certainly, our seniors love their children, but they worship and adore the grandchildren. And they are coming back close to that close-knit group for family support. But in addition to that, you need to be close to medical, transportation, and family. And one of the mantras that I always ask people, quite candidly, is the home you're living in, does it meet your current and your future lifestyle needs? And what I'm trying to point out to them is that if you're in a home that's 55 or 60 years old, it has a full basement with a laundry down, you have a main floor, and you have bedrooms up, and you have a half acre of ground to maintain, as you age, it may not be able physically to keep up with all that.
You're
One of the
right.
programs, go ahead.
I know, I'm saying you're so right, because I'm a senior and I have a home, and it's on a large lot, and I will not be cutting grass anymore. I'm done. I pay people to do a lot of things that I would have done in the past because I can't do it. The body does not sustain and support that kind of activity today. So
I'm
you
sure
bring up a
many of
good
the
point.
seniors that you and I have talked to have heard this phrase. My mother used to speak of it. She said, Mike, my get up and go got up and went.
Yes.
You just don't have the energy to go out and do those things that you used to do as a matter of course. But my point to you is this. If the home is located in the proper location for you and it's got good bone, we are able, with the HECM money, to convert the master living room into a bedroom. We can have an additional bathroom with walk-in shower, handicapped accessible, built right onto the side of the home. You will have extra money to pay for at-home care. Many people, as we go, there's so much to talk about here, but many people who are there raising their families, again, good people, worked hard, just didn't have enough time to save enough money. And when they realize that they may need long-term care, they may not have been able to afford the $7,000 or $8,000 premium. And as their health changed, they may not be able to qualify. So aging in place, again, with dignity and respect for taking care of their own life, not becoming a burden on the children, they're able to age in place, and with monetizing that locked up equity, pay for at-home care. And that's the agenda for the government. That's what the government realized 33 years ago. We have a tsunami of seniors who need to be able to live in their own home exactly where they want to be. Even prior to COVID, most seniors did not wish to go into an institutional care facility. And now with COVID, you couldn't duct tape them and get them to go in.
Mike, I totally agree with you on that. Do you hear, in the course of your meeting and dealing with so many of our seniors, do you hear any of them suggesting that their children would be their primary source for care after they have challenges physically? Are they looking to their children to take care of them if they haven't thought about long-term care?
That's an excellent question, and let me answer it this way, if I may. 6 to 8 years ago, when I was visiting, I call all of my clients when we have these kinds of conversation, Bob and Betty. That way we're not disclosing people's individual names. And I would meet with Bob and Betty when they're 66, 68. They're starting to become conscious of some of the challenges they're going to need to address and solve in the future. And early on, one of the pushbacks about using the equity in the home is the conversation would go something like this. This is the only asset we have. This will be our legacy for our children. We're going to give it to the kid. We understand we have problems. We have cash flow issues. We have things we need to pay for and support ourselves. And that's how that conversation went. Now, fast forward to when they're 72 to 74, they're back in my office. We're having the conversation again. And Michelle, it's turned 180 degrees. Now they're saying the best thing that we can do for our families is to take care of ourselves and not become a financial burden upon the children. And in reality, what they're really saying is that they hope that their boys and girls have married good spouses, they have good careers, they're raising their kids, they're going 100 miles an hour even before COVID. Now it's even Mach 10 on time, effort, and energy to raise a family.
Well,
and
I'm
now
gonna
they
interject,
realize that the kids
if
can't
I
send
may.
them $1,500 a month to live on. They don't exercise, nor do they want the option of moving in with the kids. And the conversation that I'm having with my client is this. We want to take ownership and responsibility for our retirement, and we do not want to become a burden on our children. They can very easily.
If I might
Go ahead.
interject, I think, and I'm going to speak to my very faithful viewers, particularly those of you that are over 50. Most people today cannot financially bear the burden of taking care of parents. It's a noble concept, noble. And in times past, when people lived on farms, I think there was value. But today, with families so scattered and grandchildren visiting, periodically, that whole notion is kind of gone. And I would like to reinforce what Mike Bowers has said. And I speak openly and transparently from my own experiences. It is impossible for most people to provide the level of care and attention that you, as an elderly person, would require. And thank God today that most long-term care policies will allow you to stay in the home, so that you don't have to talk about going into a skilled nursing facility or something like that. But hear me well, viewers. There's still a cost involved. It's about money. It's not about good intentions. It's about money. And so we go back to Mike, and as a housing expert, as to how do I come up with money that I don't have if the only asset that I do have is this house? How do I come up with those resources to pay for what I'm going to need? Would you speak to that, Mike?
Absolutely. The three biggest challenges are shelter, the house, medical, and transportation. And to the point that I was going to make here is that many of the clients that I speak of today understand that at the end of the line, they can use the retirement, the 401k or the IRA, and name the children as the beneficiary if there's some money left there. In addition, if they're healthy, they could leave a life insurance policy to the kids, which would be worth far more on a guaranteed basis than perhaps the equity in the home. But I
You're
assure
right.
you, the conversation I'm having is that those thought processes, their responsibility for taking care of themselves has turned 180 degrees. And I can tell you, most folks our age have had some experience as caregivers or looking in on caregivers for the parent, or perhaps we become caregivers for a period of time for our parents. It's time consuming, it's physically demanding, and if you have your job, your career, your family, it's impossible to do a complete job. So being able to live in your home, provide with the cash coming out of the home to pay for at-home care, supplemental medical, intermediate long-term care policies, whatever that might be, whatever combination we can put together as a team is part of that solution. And that's what people have to face. It's not a matter of if, it's only a matter of when. You agree?
I totally, Mike, it is a when conversation, WHEN. When is this going to occur? And it is my hope and my prayer that people watching this show, the light bulb will come off. If you have thought about a reverse or a HECM, home equity conversion mortgage, which is simply a mortgage for which you're able to take out equity with no repayment until time of death or failure to occupy after a year. It's not a complicated concept, but if the awakening doesn't come until it's too late, and I cannot be more direct than to say, you don't want to have a it's too late conversation. And I say this openly again. You want to be able to have this conversation if you are married, with your spouse, with your family, and finally with yourself, which is, believe it or not, I'm there. I need to look at what my options must be given my financial resources. And again, as I shared with seniors, over the 40 years I've been out here working with seniors, your first priority is yourself. You must take care of yourself. And you must do the things that say, I love me, and I don't want to have anything out of my control while I'm able to control. What are your thoughts on that, Mike?
Oh, that's exactly right. And even prior to COVID, the challenges of making those decisions were paramount. Today, most of what I do is to address the FUD factor, capital letters FUD. I have to help my senior clients eliminate the fear, discuss the uncertainty of the future, and remove the doubt. Because until you address the world that we live in, the financial condition, the health condition, and the home you live in, you must learn to accept, adapt, and constantly learn. Because the world that we live in is not static.
No, it's not.
And you need to keep up with it as best you can. And again, what we do is simply make people aware of what their financial options might be, so at the end of the day, they can make better financial choices. So many times people are dealing with, as I've described before, misinformation, and most importantly, that bothers me the most is disinformation. People that have a totally different agenda for a very different reason. And if you always ask the question, follow the money, what would they gain by having you do this versus that? Those are decisions that you folks have to make individually. But most importantly, you need the information to dissect it and to say, does this fit my life? Look, let me put it this way. We all have needs, wants, and wishes. And you need to focus on your need immediately, not tomorrow. Shelter, medical, and transportation. And if you can get closer to your family, your sons and daughters and the grandkids and children, it will enrich your life and you will have some sort of a support system. But again, not trying to be ugly about it, but time is not our friend. You must grasp and understand where you are and make a plan to get to where you want to be. It's that simple.
It is that simple, but again, I think because people are predisposed to get emotional about these things when they start talking about the reality of aging and the complications that come with it. There's no smooth ride, but you can certainly plan to minimize your risk through options, exercising options. So this has been good. Let's talk about how the program works, if you don't mind.
Absolutely. And I want to go back to the point that you made. HUD proposed this as just another residential loan program for a special group of people. Were any of you that listening to Michelle and I today were decide to take a HECM loan program, you would sit with us at the closing and you would sign a mortgage deed, a financing note, like every other residential loan you've ever taken. It would be recorded into the county recorder's office in the county and state that you live in, and you would continue to have full ownership of that home just as you have today. If you need or happen to have a revocable living trust, it can be put in the revocable living trust. You can leave it to your children, you can leave it to the church, or any charity you want. You'll have every right and purpose with that property you own tomorrow that you have today with the HECM program. There is no restriction. The benefits are this. It is longevity based, which is to say, we take the actual date of birth for the youngest borrower, most typically the female. We take the appraised value of the home and the current interest rates. Now, here's the takeaway. Since the government is ensuring and guaranteeing the efficacy of this program, they give me and every other lender in America a principal limit. And let's review one more time how that principal limit comes about. It's strictly a function of your longevity, how long you are likely to live in that home with the respect and sanctity that you've always wanted. So we take the appraised value of the home, the actual date of birth of the youngest borrower, and the current interest rates, and that number crunching comes out with a principal limit. Now, if you're age 70, and let's just pick a number, you have a home worth $300,000, we can monetize or make available to you roughly 50% of that home value. Anytime you have taken money out of your home, that is a tax-free distribution, just like if you've had a home equity line of credit previously. So the benefit here is you're monetizing that locked up equity to pay for shelter, to pay for medical, to pay for transportation, and to live a better quality retirement life. And those funds can come out in 3 different ways. You can get a lump sum. Certainly, if you have a small home equity line of credit or a small mortgage, we would need to pay that off because as your banker or lender, we need and must be in first position. If you had some medical bills, an automobile, any other kind of consumer debt, we can help you to pay that off. What's the benefit? If you're currently making an $800 to $1,000 a month housing payment, and you allowed us to do the HECM refinance for you, your immediate benefit would be to keep another $1,000 in your checking account each and every month because you're not sending that money to the bank or the credit union to retire that long-term mortgage. Some people say, well, Mike, I don't want to do this. I'm going to go to the bank and get a traditional mortgage. I said, I understand what you're saying, but have you ever looked at an amortization table for a traditional mortgage? in the 12 to 15 years that you have left on this planet, 60% of that payment goes to what? Interest. So now you literally have a gun pointed at your head that says each and every month you must make that mortgage payment, with the knowledge that I'm sharing with you that 60% of that payment goes to interest. You're really not building any equity. Whereas with the HECM loan program, you get the use of the money. You do not have to make the mortgage payment, and that $1,000 that you were sending to the lender gets to stay in your checking account. The magnification of that is huge. Number two, you also have the option to take a monthly distribution. Let's say, and I'm serving a lady here in the greater Cincinnati area who previously had lost her husband, and for whatever reason, they had taken out an annuity with a definitive term. And that annuity will run out about 18 months from now. And she had an advisor who certainly suggested that we have property values that are at the highest we've had forever and ever because of that shortage of inventory that you mentioned, Michelle, and the lowest interest rates we've had in 40 years. So if you can magnify the value of your home and borrow money at 3% and get cash to live on, it's practically a no-brainer. And those monies come out tax-free. And finally, one of the huge benefits of the HECM program is that any monies that you don't take out in cash, any monies that are not needed to make that monthly distribution, retain in a growing line of credit. Now you'd have to ask yourself, why would the government make a provision for a growing line of credit? It's very simple. They know you're going to need the money. A female age 65 should be able to live easily to the late 80s and programmatically to 92, 93. That's a very long time to hold your breath. And so that locked up equity can be remained in the growing line of credit, irrespective of the property value. And I have clients who, along with their financial advisor, have put hundreds of thousands of dollars into that growing line of credit. And it does two things. When the time comes that they need to have at-home care, several hours a day, during daylight hours, and some of my clients now require 24/7. And you can start chewing up $7, $8, $9, $10,000 a month very easily for that level of custody care while you age in place. But they've provided for that. They've thought ahead. They know not the if, but the when. And they made those provisions. The other huge benefit, and Michelle, I've lived through 3 recessions, and I honestly believe I'm going to live through a 4th. But let's go back to 1988. Very high interest rates, a recession. We just went through another very painful one in 2006, 8, and 10. No one vacates their home at a convenient time. And by that I mean, when you vacate the home on a permanent basis, this loan finally becomes due. You could literally live until you're 104, like my maternal grandmother up in Beaver Dam, Ohio. The program continues. It does not stop. But when you do die or pass away or go into a skilled facility, the loan becomes due. Now, if you vacate the home in a recession, this is the only loan. It's the only loan that is a non-recourse loan. Neither the borrowers, mom and dad, Bob and Betty, or the children, nor their estate are responsible to repay this loan to me, the banker. The federal government allows us to put the money on the table. We will patiently wait 18 to 25 years to get our principal and interest back, simply because we know the federal government will make us whole at some time in the future. That is a tremendous benefit to every mom and dad and to every family member who know that mom and dad want to age in place and there's no recourse. They own the home. They can give it to anybody at any time. But if things turn sour and we have another recession when they vacate the home, no harm, no foul, nobody is punitively impacted. The other side of that coin is that if there's $1 of equity left, it belongs to the estate. So you get the best of both worlds. You have the downside protection and you get the upside relief if when you pay off the loan, if the home is worth more, the estate or the children share that money. That's a powerful package, I believe, Michelle, for most people. It's a powerful option.
Well, I would like to speak to you put it so simply yet so eloquently in terms of the benefits. I'm just in awe because I have tried. I don't do that product, but I have seen the benefits of that product over the years. And again, you're right about the disinformation as well as the misinformation about it. And until a person can recognize for themselves that this is a very realistic option for them to continue the quality of their life, period. Things are changing and they will continue to change because of the times that we're in. But on the positive, we have a window of opportunity right now, Mike, where values of homes are higher than they've ever been. And not just for the HECM refinance, but also to purchase. And I want you to talk to that because it's amazing how many seniors and their children do not know that this federally insured product can be used to purchase a home. Can you speak to that?
Absolutely. Many people who have been paying for and maintaining a large home, full basement, main floor, bedrooms up, when they do relocate or decide that the home, watch this, that the home we're living in does not meet our current or our future lifestyle needs, one of the options would be for them to purchase a condo, a single family residence. I've had 3 or 4 people that purchased a duplex. Now watch this. They bought the duplex, 50-cent dollars at age 70, rented out the other side. One guy rented it up in Fairfield, Ohio for $1,080. He does not have a mortgage payment. He and his wife live on the other side of the duplex. He had instant cash flow, ownership of the entire property. It was a home run. Now, not everybody is a good landlord or something like that, but it certainly worked for those people. But remember, it's a residential program. Condos, single family, duplex, triplex, fourplex. It's nothing more, it's nothing less than a residential program for a special group of people. And daggone it, I think 80 million people ought to qualify for special groups of people. I are one. And I know how powerful this can be.
I want to just say, because I want you to first, please give your telephone number because our time is wrapping up and I need you to get the information. I need you to give them your telephone number twice so that they can reach out to you, those that feel that they would want to do this. And if you own a home and with equity, then you want to do this, period. Can you give the number, Mike?
Yes. My toll-free number is 800-589-8430, and I'm on extension 310. I will even give you my cell phone number. My direct number to reach me 10, 12 hours a day is 513-680-6168. I want to make one emphatic statement. When anyone comes to me as a prospective client, you are my client, not the builder, not the real estate agent, not the financial planner. You are my client. Walmart, Target, Best Buy have customers. When you enter a relationship with a financial professional, they should treat you with respect and dignity, and they should exclusively represent you as their client. You can tell I'm bashful. I'm passionate about serving seniors. I will give you the best information that I know how to give, that I know will work, that I've experienced over the last 18 years in serving seniors. So the contact number, once again, is 800-589-8430, extension 310. I make this promise to you. I'm here to give you information. I am not going to pull your hair or twist your arm. I would invite you to take the written illustrations that I give you, and if you have a CPA, an attorney, or a financial advisor, share the information with them. Share it with your children. This is a significant, major decision on your part, where you're going to live, how you're going to live, and how you're going to get through ever longer periods of retirement. You need options and you need choices, and that's what Michelle and I do for each of our clients.
Well, thank you so much. This is Mike Bowers. He is a national housing expert and a thorough professional. He's also a senior, so he really does know the road of aging. I appreciate all of you being a part of my world for this past hour, where we look at housing options for seniors in a changing world. And again, I thank you for your trust and your confidence in what we are trying to provide to our listening and viewing audience. I'm Michelle Graves, the Money Lady. Thank you so much for listening in, and as always, God bless you today. Goodbye.